Recording. So first, let me take you through the agenda for today, and then I'll do a brief introduction and quickly hand over to our speakers. So we will start off with our first speaker, Lauren, who's going to share with us what the value and the relevance is of the oceans for the economy and the financial sector. And then next, Peter will share some experience from Robeco on engagement on ocean health and work on nature positive pathways for fisheries and for other sectors. Finally, Jaap will share some project examples from the Dutch Fund for Climate and Development focused on innovative seaweed farming. And then hopefully we'll have some time for Q&A at the end. And just as a reminder, this webinar will be recorded and we'll be sharing the slides and recording with you as well afterwards. If you have any questions for our speakers, feel free to drop those in the special Q&A function that we have. We'll try to incorporate as many of those questions as we can during the webinar. So feel free to drop your questions in the Q&A box. But before I hand over to our first speaker, a brief introduction on why we're talking about oceans today. So oceans are vitally important. They are filled with biodiversity, produce half the Earth's oxygen and provide us with food and absorb nearly a third of CO2 emissions created by human activity. At the same time, we see that the ocean's health is declining, with biodiversity dropping by more than 50%. Due to overfishing, warming, pollution, and critical systems like coral and mangroves are disappearing. And to bend this curve, from a conservation perspective at WWF, our priorities are to create resilient habitats, protect marine species, reduce pollution like plastics, and increase sustainable fishing. But these are not just conservation topics, they are also topics that directly concern many sectors of the economy and therefore the financial sector as well, which is why today we'll be focusing on the link between oceans and finance. And with that, I'd like to hand over to Lauren, who will tell us more about the value and relevance of the oceans for finance. So Lauren, the floor is yours.
Great, thanks so much, Christine. Hi, everyone. My name is Lauren Lynch, and I am a manager of Blue Finance at the WWF-US Oceans team. I was really happy when Christine shared that her office had selected oceans as a central theme for 2025, and I think it's very fitting given that we're at the halfway mark right now in the UN Ocean Decade. And there's a lot of buzz and energy that's been coming out of the Blue Economy and Finance Forum and the UN Oceans conferences that were held earlier this month. So as Christine mentioned, I'll use the next 15 minutes or so to speak a bit about the value of a healthy ocean and the way that WWF engages with the private sector to make the business case for ocean health, and also to really encourage companies and financial institutions to leverage their power to support the transition towards a more sustainable and regenerative blue economy. So we can go to the next slide. So I think Christine has nicely set the scene, and I won't repeat too much of what she already said, but just want to underscore that in addition to climate, it's become really clear that nature and biodiversity loss is one of the very central emergencies of our time. And the ocean, which is home to the majority of life on Earth, is really impacted by biodiversity loss. But at the same time, when it's healthy, it can be a really important part of the solution. So just to highlight a couple of just quick stats and figures here, the WWF team has done work, the Living Planet report, for every 2 years for a number of years now, looking at how biodiversity and wildlife populations have been declining. And we've seen that in just the past 50 years, global wildlife populations have declined by an average of 73%. We also saw at the start of this year that the WWF's Global Risk Report has now elevated biodiversity loss and ecosystem collapse up to the second highest ranked risk in terms of both global economic impact to society and severity in terms of the next 10 years. And we've also seen the NGFS, the Network for Greening the Financial System, calling nature loss a macro critical threat to financial stability. Next slide. So to put this really squarely into the ocean context, there's just very increasingly clear link between the health of our ocean and the health of our economy. And I'm sure many of you have seen this high-level $24 trillion figure, which is arguably a pretty conservative estimate of the value of the blue economy. And if the sustainable ocean economy were considered to be a nation, its annual gross marine product or gross value add would be US $2.5 trillion per year, which would make it the 8th largest economy in the world. Now, this value comes from both services, things that Chistine mentioned, like climate regulation, oxygen production, nutrient transfers, facilitation of transportation and provision of energy, as well as goods, so things like seafood and pharmaceutical inputs, among others, that the ocean provides. Next slide. But while a healthy ocean can provide a huge amount of value, we also know that continued business as usual can put a lot of this value at risk as a result of ocean health decline. And so on this slide, you see a couple of indicators of ocean health degradation and what the impacts are. To highlight just a couple of these, we know that 90% of global fisheries are either fished at or above sustainable capacity. We also know that marine species abundance in particular has declined by over 1/3 since 1970, and that climate change is really significantly affecting the distribution of species as ocean temperatures rise and as currents change. We also know that half of coral reefs and 1/3 of seagrass have been lost, and that mangrove forests are actually being lost at a rate of 3 to 5 times that of terrestrial forests. And when it comes to plastic pollution that's entering the ocean, this is happening at extreme levels, the equivalent of a dump truck load of being dumped every minute. Next slide. So all of these challenges with kind of business as usual and the negative impacts on ocean health could put a huge amount of financial value at risk. WWF did research a couple of years ago to quantify this and found that as much as $8.4 trillion could be at risk as a result of ocean health decline over just the next 15 years. And this is not a niche issue. We also found that this could impact an estimated 2/3 of globally listed companies who are either directly or indirectly exposed to these risks. So when you think about the scale of these impacts, this really can pose significant risks both to companies as well as their investors, insurers, and lenders. And so it's a significant issue to be thinking about. Next slide. So to support the transition to a more sustainable, resilient, and equitable blue economy, WWF's Sustainable Blue Economy Initiative, which is led by Louise Heaps, which many of you may know on this call, have been working for a number of years now to influence how the ocean's real economy is financed, to ensure both that mainstream finance is redirected towards sustainable and inclusive blue economy sectors, and also that new finance starts to flow at scale towards the restoration, protection, and regeneration of and sustainable management of our ocean's natural resources. Next slide. I think that this figure, this is from UNEP's 2023 State of Finance for Nature report. I think it's just a very powerful reminder of the scale of influence that the finance sector can have in particular, in terms of, on the left-hand side here, redirecting the $7 trillion that's annually flowing into activities that have a kind of net negative impact on nature, as well as on the right-hand side, scaling up that much smaller amount of funding that's going specifically towards nature-based solutions. So I think both parts of this equation are really important for us to be addressing. Next slide. So just to get a little bit more specific about specifically how WWF has worked with financial institutions and companies on sustainable blue economy issues and sustainable blue finance in particular. A lot of our work to date has centered around developing and then helping to operationalize the sustainable blue economy finance principles and associated guidance documents that you can see here on the right-hand side. And this guidance provides really sector level recommendations for actions that companies in sectors like seafood, like coastal tourism, like shipping, and like offshore wind or other marine energy production opportunities can take to really contribute towards avoiding negative impacts and also contributing to ocean restoration. Next slide. So I'm just going to share a couple of specific examples. A lot of the work that we've been doing for the past 3 years especially has focused very squarely on seafood finance. And so just to share a little bit more detail about how this has looked. So one of the ways that we've engaged with key actors in the seafood finance space has been to co-lead a seafood finance working group with UNEP-FI. And this working group has been ongoing for about 4 years with about 100 members at various points participating in peer-to-peer learning opportunities, piloting new tools like UNFI's setting sail target setting guidance, as well as TNFD sector guidance, and highlighting new research. And actually, Chistine, if you just click through, there's a couple of animations that I have here. So the next point is just around some industry benchmarking that we've been doing for the past 3 years. I'm very excited to highlight a new report that we just published at WWF, which is the 3rd iteration of this view into 40 major lenders in the seafood sector and the kind of rigor and robustness of their expectations for clients in seafood. And paired with this, we've also been looking at how 42 major investors in the seafood industry have been setting expectations and engaging with clients in seafood. And if you click to the next slide, you can see some of the progress that we have seen over the past 3 years, which I think is really encouraging. We break this down by sector, and there's a lot more that we could get into, but just to show the general trend here that progress is happening. And a lot of this progress we have helped to support through facilitating kind of bilateral engagement to support policy transformation within these financial institutions. And the last click through on this slide is just to highlight work that we've been involved with the Fair Kohler Initiative, who convenes investor collaborative engagements on animal proteins, alongside Planet Tracker, the World Benchmarking Alliance, and UNFI, to support a body of work on encouraging more robust traceability in seafood value chains. And I think this is something we've been excited about, to see the enthusiasm and the interest of investors really engaging on issues in the ocean space. We've seen the participation grow from 35 investors representing $6.5 trillion in combined assets last year to now in its second phase, we have 45 investors representing $9.6 trillion in assets. So really highlighting that interest in the oceans and in seafood traceability in particular is something that is increasingly top of mind for the finance sector. So I think if we go to the next slide, I'll start to wrap up just with some maybe recommended reading here to highlight 3 new sustainable blue finance reports that WWF published earlier this month at both WWF and UNOC. So the first one here is the above board report, which I mentioned on seafood lender policies. The second one here is kind of a teaser report, an ocean of possibilities. It's a briefing that's been developed by our Greening Financial Regulations Initiative and Sustainable Blue Economy Initiative that really speaks to how and why ocean health matters for central banks and financial regulators. And it's a really short report right now that is a preface to a report that's coming out later this year. So I'd encourage folks to take a look at that. And then the last report here on the right-hand side is a much larger report towards nature positive for the ocean, which is new guidance, which is really specifically designed to support companies who are operating in marine and coastal environments to identify credible actions that they can take to contribute towards the collective nature positive goal. I have one final slide just to kind of double down on that body of work, which is just to highlight the structure of this new nature positive oceans guidance. So I think we'd seen a gap in the way that guidance was being developed for corporate contributions towards nature positive, really predominantly focused on the terrestrial side of the house thus far, but seeing an opportunity to support companies that are operating in the blue economy more. So this is a very rich resource that outlines a set of really sector-specific, practical, and critically evidence-based actions that businesses in 4 sectors, offshore wind, coastal and marine tourism, shipping, and seafood, can take to credibly contribute to the nature positive goal, which is the goal of halting and reversing biodiversity loss by 2030 and aiming to achieve full recovery by 2050. And I think an important thing here, and I'm sure we'll talk about this later, but really alignment with key initiatives like the Science-Based Targets for Nature, as well as the TNFD recommendations for understanding materiality. And so this is something that WWF will be working to implement with companies and FIs in the ocean space moving forward. So I think with that, that's the last slide that I have, and I'll turn it back over to you, Chistine. Thank you.
Thank you very much for that comprehensive overview, Lauren. And I know we have a Q&A later, but I was curious. I know that the last month has really been Ocean Month, so there has been lots of events and things happening. Was finance high on the agenda? And can you tell us a little bit more about what has been happening in the recent month when it comes to oceans?
Yeah, I mean, I think I may have, the Blue Economy Finance Forum and UNOC maybe gave like a overweighted view in my mind as to how important oceans are on the agenda. But I think genuinely we've seen a real moment now for oceans on the global stage, on the stage of governments making huge commitments to both capital allocations and protections of marine, increased area of marine protected areas. I think, the Blue Economy and Finance Forum this year had, I think it was 1,800 participants, and UNOC had one of the largest showings of private sector participation on this topic. So I think there's a huge amount of momentum in the space. I'm just very encouraged by all of the kind of outreach that we've been getting off the back of that. And I think we'll take that forward, hopefully through the end of this ocean decade and beyond.
Great. Thanks for now, Lauren. And just as a reminder, if anyone has any questions for Lauren, feel free to drop them in the Q&A section. But for now, I would like to hand over to Peter and invite him to take the floor to share more about Robeco's work on ocean health and nature pathways for fisheries and other sectors. Peter, over to you.
Yes, thank you, Christine and Lauren, for the very good introduction. A lot of the work that we have been unpacking in our program, which is called Ocean Health, is actually building on what Lauren just presented. So we've been jointly also working on sort of road testing the nature pathways approach and how we could make that applicable for our engagement work. So Robeco is a global asset manager. We're based in the Netherlands. We have over 200 billion euros assets under management across listed equity, fixed income, and other types of investments in sovereign bonds as well. But the vast majority is focused on companies and their sustainability performance, and that's what the team that I lead then focuses on, with both engagement with approximately 300 companies. And then we vote at the AGM for around 8,000 companies in our investment universe on behalf of our clients and the funds that we manage for them. So let's go to the next slide. I think quite a bit of this has been mentioned by Lauren as well, so I'll be short. But the blue economy and oceans are really important for listed companies, often in a bit more of an indirect way, and that's also where that makes it more complex for us to see how can we really hold them accountable for some of the actions. But we have been zooming in on a couple of sectors, so seafood and fisheries, shipping and cruise lines, in which we have investments, either through debt that we provide to these companies or with equity, in which we find that there is a real avenue to discuss either biodiversity loss or the climate impact that these companies have on the ocean biome. So let's move to the next slide. So a first example is the seafood industry. This is probably the most mature when it comes to the type of investments that we have. This sits both in quite a bit of our Asian equity exposure to some of the Japanese fishery companies or other companies in Asia, and then particularly also I think the Norwegian salmon industry is probably most mature when it comes to investments by listed equity investors. There is a highly fragmented industry, so I think that is an important element to highlight, that it is small companies. It's not very concentrated into larger houses as you might have with terrestrial food production. So that makes it then more difficult to really tackle which other companies you can influence. There is a real pressure on the environmental side on sea and coastal ecosystems, both through wild catch fishing, but also through the aquaculture production systems. They are obviously extremely exposed and dependent on the health of those ecosystems for also their productivity. So we do find with that, particularly with the aquaculture companies, you find a very, I would say, fertile ground for constructive conversations on how they can further increase sustainability of their production systems. On the fisheries side, there is always a bit more of I would say, tension between obviously their opportunity to maximize their productivity, and then also the guardrails that through quota and through other systems are applied by governments and ultimately informed by scientists in terms of how much they are able to catch. And if you go to the next slide, that's where you see what type of objectives we set. So we split this across the whole program in 4 different areas. So the assessment that companies make on the impacts and dependencies, and also the resilience of the ecosystems that they depend on. We then focus on the second area on stakeholder management. So this is really how do they work in the supply chain, what are the expectations that they provide, and also how do they enter into industry or public policy engagement across more resilient policy making when it comes to ocean health. Then strategy is a third pillar. So really what is ultimately the stated and committed biodiversity or net zero strategy that the companies have committed to, and how can we challenge them to be more specific and really set targets to achieve traceability. And then the final point is really around governance and risk management. So this is, again, looking at how the executive committee is aligned in how board oversight has been set up, and ultimately how these sort of strategic incentives trickle down through the organization, ultimately to those parts of the business that are really in charge of the day-to-day operations. So across all of these elements, this is what we've identified as where companies really have an opportunity to affect change, and how they best prepare themselves to deliver that. Can we go to the next slide? So with WWF, we've done a bit of a pilot, which Lauren also mentioned with the report that they've now been able to publish in 2024, looking at what is the type of guidance based on WWF's expertise in the sector that we can bring into a nature transition pathway framework in terms of the type of verification measures, the type of practices, and ultimately how much priority should we give to this when we do challenge the company on their practices. So you see here sort of a mitigation hierarchy where we initially aim to avoid, reduce, and otherwise offset any negative nature impacts. And we've classified that as really a must-have for a company, so really a required factor, a should-have, which is an important one, or a could-have, which is a bit more on the opportunity side. And this is for wild catch. This is just an example. It has been difficult when we think about these nature pathways to really then move into more of a quantified approach in terms of how much of these practices a company should be able within the boundaries of their ecosystem. I think that is really the next step which we would want to move towards. But this has been a very helpful framework to develop so that it informs our engagements in the sector. And then we have 2 other sectors. If we go to the next slide, I can highlight also our expectations around shipping. So shipping is also an industry which isn't very widely invested among sort of mainstream investors, but we do have a couple of larger companies, particularly in Asia, where we are embarking on an engagement. You do find in these instances often that parts of the economy are very well understood, researched, and also the engagement is a common practice among investors. So if you think about terrestrial food production, or if you think about forestry or other things, that's where I think a lot of the biodiversity focus over the past years has been. Shipping has not been in focus, and this is also what we then find when we embark on this engagement activities on behalf of the portfolios we manage, is that when these companies are really not used to getting these questions, it does take a while to actually get them familiar with why investors are asking these questions and to embark on a constructive dialogue. But from our perspective, there is a lot, as you see here, in terms of both the use of HVO as a propulsion fuel, which obviously is highly emissive. It's generally quite expensive. A lot of these supply chains run on very thin margins when it comes to transportation companies, and therefore ultimately any sort of investments in different types of propulsion, in different fuels, etc., they will have a significant impact on sort of the sustainability of these companies. So that's a very sort of balancing act that we need to see between where do companies remain profitable while really making the significant steps they would ultimately need to make to reduce the impact of their business operations. So can we go to the next slide? So again, here we've also split it in these 4 buckets of expectations that we have, which we then ultimately hold them accountable for in the course of the 3-year dialogue that we hold with these companies. So here we're looking to also have more of a view on how companies use the TCFD and TNFD dependency and impact assessment. It's often also here what I mentioned before, the cost-benefit assessment, which is really important. And the more companies make this granular, the better we can also discuss the business case and what would be necessary or what are some of the barriers to break through from this assessment to really then also starting to develop it into a strategy. And I think this is where a lot of companies haven't gone through the assessment phase and therefore are not yet comfortable setting targets. We would ultimately want companies to develop an SBTi approved target, but again, you do need to follow through all of these steps before you can even think about verification. So this is really a bit of a step-by-step approach that we want to embark on with these companies. We also expect them to develop more proactive and responsible public policy and industry engagement. Also here, we find that the industry isn't very well coordinated and represented yet. And ultimately, also from a governance perspective, often with these emerging markets companies, there is a lot to still gain in the basic proper governance of and risk management of sustainability before you can start talking about more mature expectations as it comes to the other 3 buckets of engagement objectives. Can we go to the next slide, please? And then as a last industry, cruise tourism. This is also an important industry when it comes to impact on the ocean biomes. This is, in many cases, these are 2 US companies that we invest in, where you do see that also the recognition by their customers and also the sort of regulatory pressure is very limited, which then also brings this further away from the sort of financial materiality that they typically would have as a lens. And I think that is often a challenge we need to breach between sort of where is there significant impact from a double materiality perspective and how do we get these companies to also recognize these as important topics to work on. And if we then go to the last slide, just to wrap it up. Again here, the same objectives. This also makes that across the 3 different sectors that have an impact on ocean biomes, we are able to sort of compare the companies like for like. We did have a better uptake in terms of corporate access. So in terms of the companies actually responding to our request for engagement dialogues over the past months. And I think this is also an area where with more pressure, I think also from media and NGOs and others, we should be able to get some initial commitments from these companies when it comes to further embarking on the types of emissions and impacts. I think that's one of the biggest direct impacts on ocean biomes, from hazardous chemicals, from the way how they operate the ships as they go through different ecosystems. In terms of stakeholder management, there's still a lot to gain for these companies. We would expect the companies to really also invest in research and development to search for alternative ways to either treat hazardous chemicals, but also how to design the ships and how to minimize the impact of often thousands of people that they have as their customers on board. And then ultimately, again here, governance is typically a bit better as a starting point that comes out of our research. But again, a lot of the alignment of sustainability objectives compared to, for instance, remuneration of their executive team isn't yet in place. And I think this is also a key element where we want to spend more time on in the coming 3 years. So all in all, from my perspective, a really important topic. It's also very good next to a lot of the attention that we have spent over the past decade on sort of the threshold impact of biodiversity of the investments that we have when it comes to deforestation, palm oil, and also other types of impacts around water and waste, that we now really have a full program on the ocean biomes. And in that sense, it really aligns indeed neatly with both WWF Netherlands focus this year, but then also more broadly with the team in the US that has really been very helpful in helping us, particularly with the seafood nature pathway that I presented earlier today. So that's it from my side, Christine. Thanks.
Thanks very much, Peter. And very interesting also to see how the differences between the sectors and the maturity. I just asked Lauren about ocean-related events, but I think that you are attending London Climate Action Week. Is that right?
That's right. Yes.
I'm just curious if you've heard anything about the ocean shed there in London.
To be honest, it has actually been more of an integration of the deforestation and nature work into the climate agenda. I'd say that oceans, from that perspective, is still the next frontier that needs to be connected.
Yeah, I see. Still some work to do there. Great. Well, thanks very much, Peter. And again, if you have any questions for Peter, feel free to drop them in the Q&A or in the chat. We'll get to them at the end. But now, first, I'd like to invite Jaap to share some underground, or I should maybe say underwater experience of funding innovative projects in the ocean space. So Jaap, the floor is yours.
Thanks, Christine, and good afternoon, good morning, good evening, everyone. So my name is Jaap de Jong. I work at WWF Netherlands, also based in the Netherlands, as program manager for the Dutch Fund for Climate and Development, also known as the DFCD. And thanks for inviting me, Christine. I'm very happy to present one of our companies in our portfolio in northern Vietnam that is into sustainable seaweed and oyster farming. But before we dive into it, can we go to the next slide, please? Just a quick recap of what the Dutch Fund for Climate and Development, what DFCD is, for those of you that are not familiar with it. We are a blended finance program managed by a consortium of 4 organizations with FMO, the Dutch Development Bank, as lead partner. And we help companies that want to upscale their business in a sustainable way. So we're active in Africa, Asia, and Latin America in 4 specific sectors: agriculture, forestry, water, that refers to WASH in this case, drinking water, hygiene, as well as environmental protection. And in the origination facility, which is co-managed by WWF, so that's what I do, we provide grants and technical assistance to companies that should support them with setting up a sustainable business model and a business case and prepare them to receive an investment. That can be a debt or an equity investment. So that's where the blended finance aspect comes in, combination of grants, technical assistance with debt or equity. Our agricultural projects, we refer to them as land use projects, are taken over by FMO. Water projects, Climate Fund Manager, CFM, but we can work with any other local or international investors. So once we are done, let's say after 12, 18 months of working with a company, we hand them over, and it's in the best case scenario, they actually receive the investment and can upscale their business. So if we can go to the next slide, one of the companies that we're supporting is STP in northern Vietnam. I took this picture about 4 months ago when I visited their pilot project. This is actually a sustainable seaweed and oyster farm underneath these buoys. But next slide, please. Let's look into the region first. Some of you might recognize it. It's an amazing, stunning, beautiful scenery close to Ha Long Bay in the Quang Ninh province of Vietnam, which hosts about 1.5 million people. A very biodiverse marine ecosystem. but also vulnerable to sea level rise, to coastal erosion, to pollution coming from land and from sea, to overfishing. And at the same time, the communities that live there are very dependent on marine farming. It's a very traditional industry with significant economic importance. However, it's mostly made up of very small scale operations that focus on a few single value activities, which are causing considerable negative effects on the environment. Especially because the farmers use outdated methods. So these foam buoys that they're traditionally using, they degrade quickly, they release microplastics into the environments, and farmers also use chemicals for cleaning them. Besides this, they traditionally use bamboo structures that are very vulnerable in storms. So they break easily, explained. Can we go to the next slide, please? Thanks. So in comes a company called SDP. They're actually new in the aquaculture space because they're traditionally a producer, well-known, very established producers of HDPE, high-density polyethylene equipment, plastics in Vietnam. And from that experience, they started pioneering a few years ago into sustainable aquaculture farm models, always having environmental protection and innovation as a top priority. Because they realized if we can get sort of an integrated supply chain where we're working together from the production side as well as the offtake side, we can really add value to the region, boost sustainable livelihoods, and set up a sustainable business here. Which they piloted in a 3-hectare farm last 2 years, with the intention to scale to another 150 hectares. And if they can find the right permits from the Vietnamese government, they intend to scale in the second phase to 800 hectares. The mollusks, the oysters, are used for consumption. The seaweed as well, in a different way. It is used to extract carrageenan, which is a food additive used to thicken or stabilize various food and beverages. And I was told also in certain regions in Vietnam, it's also used to produce seaweed-based jelly candies, but I've not seen those in the store. Can we go to the next slide, please? So the first question that popped up when I saw this project, and maybe others of you are also thinking, this is plastics, how can this be sustainable? It actually is, and this is because these HDPE structures have a lifespan of 30 years. They do not release microplastics, they don't need to be cleaned chemically, and they can be recycled. And SDP can actually do that in their own factories. While these buoys that the farmers are traditionally using, they start degrading from day one, and they need to be replaced after 5 to 10 years. So even though it's plastics, it's a far more sustainable structure. Also because it's more climate resilient. So unlike the bamboo, they're not breaking in a storm, but they can actually cope with severe weather events. Also worth mentioning, I work at a nature conservation organization, is the biodiversity angle, of course. Traditional way of seaweed farming is horizontally, very close to the surface. This is vertical farming. So that's an innovative aspect. And that seaweed purifies the water and provides a safe habitat for all kinds of underwater life and biodiversity to thrive. Can we go to the next slide, Chistine? So what have we done as WWF in what we call the origination facility, where we support the company to receive the investment? We're providing technical assistance to the WWF Vietnam colleagues and also provided them with a grant. Actually, we're working with them now. We adopted this project early this year. First of all, we're doing 5 main pillars of work. First of all, we're looking into a fair pricing study, because what happens here is that SDP supplies the farmers with raw materials, seedlings, and the structures used for farming, and the farmers commit to selling back the produce to the company. So they both benefit, but then what is the fair price here? So that we're assisting the company to establish a good mechanism for this. Secondly, what we see is that the farmers, some of them are organized in cooperatives, but many of them are not. So we want to strengthen the cooperatives that are there, and others, for others, help them set up a cooperative and strengthen their capacity, of course, also. Then thirdly, what we realized, or what the company realized, is a bit unclear what the role is of gender, of women and ethnic minorities in the region. How many are involved in the business? What is their exact role? What's the nature of the work? What are the working conditions? How much are they paid? So we're also financing a baseline study here to get a better understanding, and based on that, the company can provide a strategy for women and ethnic minorities. Fourth point, after the 3-hectare pilot that is now concluded, but before scaling to 150 hectares, the company STP wants to do another pilot, 5 hectares, which is going to be the standardized size used for scaling. So they want to test it one more time, integrating all the results from our work into this 5-hectare module. They call it a module. And then finally, we're going to look into monitoring evaluation, for example, monitoring water quality. Can we go to the next slide, Christine? Thanks. So important aspect for us is working with the farmers. WWF works for nature and people. So like I said, these farmer-linked models, working together with farmer cooperatives, that's a key aspect of this project. Developing a fair sharing price and revenue sharing approach is an important aspect of our work. With an impactful aspect is the hopefully what we'll see is the increased livelihoods. Important aspect here is the income. So the projected income increase is $2,000 to $3,000 per year per farmer. So that's considerable. Being a climate fund, one of our key objectives is, of course, improved climate resilience. So the farms become more climate resilient, but the communities that use farming as a source of income, main source of income, also become more climate resilient. Next slide, please. Another crucial aspect of our work is working with investors. So the impact that I'm talking about will only happen after the company has actually received an investment. We are only doing preparational work. So we're not providing any financial advisory services as WWF, but we are into matchmaking. So we have approached a handful of investors and asked whether they want to learn more about STP and whether it would be of interest to them to invest, and connected them to the company. And hopefully, and the first, it looks very positive. We will soon be able to, STP will soon be able to sign an agreement with for a €7 million amount with one of these investors. And it's actually interesting because we're also introducing a new type of investor to them. So it's not a traditional bank, maybe from Asia, but an impact investor that also comes with specific criteria when it comes to impact. So that's very helpful when you want to reach the impact that we envision. Moving on to my last slide, which is of course about impact. By the way, this is a photo of the current pilot. What intrigued me myself is that there's quite a lot of unused space here. Of course, it's necessary for for boats to go around and so on, but it's also a place where where nature can just be. But anyway, so the company wants to scale to 150 hectares in the first phase and 800 in the next phase. Direct beneficiaries for the first phase is 200 farmers, but of course they have families, and we're also looking at 500 indirect jobs. And aiming for increased participation of women. The 2,000 to 3,000 euros corresponds with 30 to 50% income increase, and we're looking to enhance resilience of marine and biodiversity. Now, apart from this project, maybe good to note, so the intention of my presentation was to give you a concrete example of a project in the marine economy. What I would like to mention also is that we hope that the project can also serve as sort of a blueprint for the sector. So together with the WWF Vietnam, as well as local and national government in Vietnam, we're trying to see if we can move the sector towards more sustainable practices as well. Thank you. That's it from my side.
Thanks very much, Jaap. And thank you also for highlighting the opportunity side. So I think we've been speaking across the breadth of what we call greening finance and financing green. So both the integration of these ocean-related risks into the management of financial institutions and companies, but also capturing the opportunities and actually moving the financial flows towards a more sustainable alternative as well. All right, so that leaves us with a bit more than 10 minutes for some Q&A. So again, feel free to drop any questions you may have. I would like to start maybe with a question for you, Jaap. So we mentioned land versus ocean. In your experience, how is it different to work on an ocean-related project and with investors on ocean-related projects compared to land?
Yeah, so thanks, Chistine. So this is a project in our agriculture portfolio. And I must be honest, it's the only one that is not on land. So in a way, it's surprisingly the same because it's just with smallholder farmers, with building cooperatives, with the same type of impact indicators, etc. But it's still a bit of an outsider in our portfolio, and also see in the events that I visited, the impact investors that I meet, that their natural tendency is more towards land-based projects.
Interesting. I'm curious, Lauren, if you can also reflect on that, on maybe the awareness among investors about ocean-related opportunities.
Yeah, I mean, I won't speak on Peter's behalf. I'm sure he has lots of thoughts too. But I think it is something that we are seeing growing interest in. But certainly I've had a handful of investors say, this has not been a priority of ours in the past couple of years, and it's something we'd like to learn more about. And so I think we're at this moment where there is growing demand for understanding the particular ways to assess kind of impacts of corporate activity in the ocean, recognizing that the biophysical properties of the ocean, the sheer extent of the ocean, and our capacity to collect data does differ quite significantly than it does in terrestrial spaces. So it is kind of a different set of equations that you're making when you're thinking about the role that investors can play in kind of understanding impacts of their portfolios in the marine environment. But I think there is a strong appetite, and the research that we've done, but that others have done too, just recognizing that it's not this niche set of things, and we're not just talking about direct impacts and direct reliance on the marine economy, but that a healthy ocean is a critical aspect for companies operating across the entire world.
Yeah, thanks for that, Lauren. Peter, also curious to hear your reflection. And there was also a specific question from one of our audience members on how the companies are responding to your ocean health engagement topic, and in particular the nature positive framing.
Yeah, thanks. And just coming back to the previous question and around sort of where investors are, I think there are dedicated and more often impact-focused investors that probably sit closer to where Jaap is looking for opportunities after the origination, where you find an interest also in sort of ocean-based business models. Obviously, when you then think about the type of companies that we invest, they have a market cap of usually 200 million and upwards, and often into the billions. And so this is a very different scale of companies. So these are really the larger aquaculture companies or fisheries companies, or just the very large shipping companies that from the global industry. So I think those are a different type of companies when it comes to their dependencies. Often they have been around for decades already, and very much dependent on these ecosystems. When it comes to the sort of the response, so I gave some answers around the shipping companies where we find it actually the hardest to get the dialogues going. We started this program in January, and it is typical that some companies need a bit more time before once you've started a relationship with a company are willing to respond. We've had very good uptake, and already also for a longer period of time with the Norwegian salmon producers. I think that's also where the concept from a cultural perspective of nature positive also is most recognized. So I think that is also where we find that we're having very good discussions around that, and a lot of innovation is driving that. While there is still, I think, critical points in terms of how significant their impact on those ecosystems is, and particularly if you then think about some of the wild catch activities that are happening also in the Atlantic Ocean or in the Arctic Ocean above Norway that they are responsible for. Yeah, when it then comes to the cruise line companies, I think that's where the nature positive framing, so the double materiality, is indeed a lot harder. So they will always be looking to what can we do in terms of disclosure? What does it mean for ultimately our business case? Will investors be more willing to invest in us, or will our customers be attracted to our company compared to our peers? So this is still very much a what will it do for our ability to generate profits if we make the changes that you're asking from us? So that is a very sort of confined lens still, and I think that's also where then nature positive is still further out in the future before that becomes more of a starting point for your engagement conversation.
Yeah, thanks, Peter. That makes sense. And I think so. We've mentioned a couple of different groups that are important. So impact investors, institutional investors, large companies, small companies. But Lauren, you also highlighted an upcoming report on central banks and oceans. So why central banks?
Yeah, I mean, I think central banks as sort of overarching managers of macroeconomic risk and thinking through implications for kind of requirements for the financial system writ large, they of course play a really important role in sort of codifying how the finance sector broadly should be thinking about what risk considerations are taken into account. And so I think highlighting the issues around the material financial risks that ocean health decline can have on the banking system is a really powerful lever for amplifying some of the work that's being done, individually with individual institutions as well, and can really centralize and make more consistent the approach that institutions are taking to thinking about what are the key issues to be looking at. So I think that's something, I think NGFS has had a lot of success in highlighting climate kind of risks. And so I think we're optimistic that bringing in biodiversity related risks, particularly in the ocean, through that avenue can be a powerful amplification measure.
Thank you, Lauren. Next question is for Jaap from one of our participants who is curious about STP's customers or target customers. The question is, are the end products sold to domestic buyers in Vietnam or international buyers, and for what uses? Thinking about this from the lens of a potential impact investor assessing revenue streams for the business.
Yeah, so currently there's offtake agreements in place, and produce from the pilot is also sold. 90% stays in Vietnam, so it's as a Vietnamese off-taker, and then around 10% is exported. And the company in Vietnam that is buying the dry seaweed for 150 hectares, it will be around 2,700 ton of dry seaweed. They will use it for extracting this carrageenan that I explained about.
Thanks for that, Jaap. And then there's another question for Peter in the chat about metrics, which is, of course, a topic that often comes up when we talk about nature and biodiversity. Are there broad metrics that Robeco is seeing as most useful or significant for ocean-related engagement?
I'd say that it's probably a focus within a sector in terms of the type of metrics that you're looking for. So around MSC and ASC certification, that was a really good starting point for the work that we have done together with WWF on the seafood and aquaculture sector, because that obviously gives you a guarantee of a certain standard for the percentages of the companies that have been of their operation that have been certified. So that gives you a lot of clarity with a rather simple metrics. Now there is a whole sort of debate behind certification and how much can you really steer on that and how much can you trust that. But that is also something that we continue to test with with the companies as we go through those conversations. I think for the others, where we look a little bit more into also the climate impact, it would ultimately indeed be fuel efficiency of shipping companies and also the cruise line companies, the types of fuels, the fuel mix that they're using, and also just the types of metrics around waste when it comes to the cruise lines and their potential impact from that. So there's a few key metrics, and they are probably best defined on a per sector basis.
Yeah, that's very clear, and I think also the experience that we had generally with nature, that it's very sector specific. I'm afraid we're almost out of time. My last question is for Lauren. So if there is financial institutions in the room that want to dive into this topic more, what would your advice be for them?
Yeah, I mean, that would be excellent. We're happy to talk to you. I'd say, you know, the UNIPify Sustainable Blue Economy Finance Principles are a really great starting point, outlining just the overarching sort of principles that can undergird what sustainable finance looks like in the blue economy. And then, as I mentioned, there's a whole swath of technical guidance that supports implementation of those principles across different sectors. As Peter mentioned, you know, I think taking a sector-specific approach is really important because the business case for sustainability and the impacts dependencies are really different across seafood, shipping, coastal tourism. There's a whole set of guidance that's come out from TNFD with really specific recommendations for maritime transportation, fishing, and aquaculture recently. The SBTN Oceans Hub is supporting the setting of science-based targets for nature for seafood. But I recognize in saying that, you know, it's an increasingly complicated space with a lot of resources. So I'd say having a conversation with any of us here is certainly a starting point that we'd be happy to facilitate.
Thank you for that, Lauren. And with that, we've come to the end of our webinar. I would like to take the opportunity to thank our speakers, Peter, Jaap, and Lauren, for their fantastic contributions. I think we've learned a lot in this hour about the oceans and the relevance for the financial sector. So as mentioned, we'll be sharing the recording and the slides with you afterwards. And there we will also mention the resources that we've been highlighting. So for now, thank you for your participation, and I hope that you have a great rest of your day.
Thank you all.
Thanks.
Have a great day.
Thank
Bye.
you. Bye.
Bye.
Thank you.